What is going on, guys? Welcome back to another market update. As usual, let's get straight to the charts. So, when looking at the bigger picture, not that much has changed over the past few weeks. We have pushed slightly higher as predicted, but so far the rally has been pretty disappointing. In my previous video, I did talk about the possibility of an inverse head and shoulders forming, and so far this has not been invalidated. So we have our left shoulder over here, our head, and now when it comes to the right shoulder, you could interpret it in different ways. Maybe it's one of these smaller ones and we're just retesting it. Or the more likely explanation is that we're just forming that right shoulder right now. And then in this case, it would look something like this. Now, obviously, nothing is for certain until we get an actual breakout and confirmation that this is the pattern we've been building here. But nonetheless, this looks relatively bullish in the short term. If it does end up playing out, then this could allow us to get that perfect secondary lower high here to that 75k region or so before topping out and then rolling back down. This would be ideal for trapping bulls. Now, this scenario is certainly possible, but don't bet on it because sometimes we don't reach our intended target, or it could be that this isn't even an inverse head and shoulders. But this would create a very beautiful scenario for those believing that we will have one final low in the coming months, because then we would potentially put in a lower high here on the RSI. The price action would obviously put in a lower high as well in this scenario. And then when we come back down, most likely the price would take out the previous low, but the RSI has a good chance of putting in a higher low. And this would create the double bullish divergence we've been talking about. And we also don't necessarily need to create a lower high here on the RSI. It could actually match the previous peak or even go higher. That's not the important bit. But obviously there's also the possibility of this rally not having enough legs, and we could just end up creating a traditional bullish divergence here compared to this bottom here. Either way, we're dealing with a bullish setup here, and I do believe that the bear market is coming to an end very soon. Next, let's look at our 4-year cycle chart. And guys, I did some more digging here and I wanted you to check something out. Remember how I said that this meme was almost perfect and that in reality the tops and the bottoms happen within a few weeks of the predicted date. But if you're willing to bend reality just a tiny bit, we can make it look even more perfect. So if we come back to this chart and look at the dates here between this cycle top and this cycle bottom, and then this cycle bottom and this cycle top, you can see that this happened a little bit sooner than expected, 1050 days, and this happened just a little bit later than expected. But if you zoom in here and ignore the fact that technically speaking, this here was the bottom, you can actually just put this date back to roughly 364 days, and you can pull this bottom over here, and what do you get? 364 days, 1062 bars, and the price difference is minuscule if you look at the wicks. We're really talking about just a few dollars here. I'm just zooming in here to even see what the difference is. So this was $15,568. This was $15,478. So technically speaking, you could say that this was the bottom and this was just a tiny fake out. This is the same type of concession we made with this tiny wick over here. And honestly, guys, this looks absolutely ridiculous. It almost looks like the price is pre-programmed and not determined by humans. Do I believe that at some point this pattern will break? Probably. But why should I bet against it while it's working? The 4-year cycle and October bottom theory have become pretty popular lately, and this is why some very popular crypto X accounts have tried to be very contrarian regarding this matter. So the logic is that too many people believe in the 4-year cycle, and this is why it cannot happen this time around. And this is exactly the same argument that has been used in the previous cycles, right? So maybe you have to use reverse psychology, because too many people believe that the 4-year cycle will happen. You have to be contrarian regarding this, but too many people will be contrarian regarding this, and so you actually have to believe in the 4-year cycle. Whatever the case may be, we are obviously in a very good value zone, so I'm pretty much all in with my spot holdings. But when it comes to leverage positions, that's a different question. I do agree with the idea that the downside potential is relatively limited because we have a lot of confluence in the low to mid 50K region. I'll be talking about that shortly. And yeah, there are a lot of people predicting like $30,000 Bitcoin or so. I don't think that's going to happen. I think that's highly unlikely. But that's the thing about the Fourier cycle theory. It doesn't tell you the level, it just tells you the timing. We could take out the previous low by $1, or we could take it out by tens of thousands of dollars. So we do have a really nice liquidity pool building up over here, all the way from the 51,000 region to like 59,000. So there is a very good chance that we will dip into this liquidity pool at some point in the coming months. This is where a lot of the highly leveraged longs would get liquidated, and also where the whales would love to buy in without affecting the price too much. We do also have some nice liquidity to the upsides, but it's right above the previous high for obvious reasons. This is where the bears have set their stops, with the logic being that if we take out this high, we may go significantly higher. But I do believe that there's a much higher chance that we will take out this zone here before taking out this zone. Or at least there's a good chance that we're going to take out a good chunk of it. Next, let's look at the Bitcoin power law chart. So the good thing is that we've been holding above the power law support for quite a while here. We did dip below it a little bit for just a matter of days before bouncing back higher. And we are holding above it right now. Obviously, this is all good news, but we still have to be cautious around this level. As I said, I bought most of my spot holdings because we did reach that bottom 60% deviation line, which is all good. But at the same time, timing-wise, we're not quite there just yet, right? So even if we do have some limited volatility below this line, I'm not going to panic. The 60% deviation line is relatively arbitrary, as I've explained before. The most important thing is that the median power law holds and that the general power law trend holds over the years. And that's the biggest question that Bitcoin has to answer. The power law fitting chart tells a slightly different story. The lowest possible level it projects right now is 48,000. The Bitcoin power law oscillator tells us that we are deep into the value territory of Bitcoin and that you cannot go wrong by buying Bitcoin here, even though technically speaking we have seen even better value in the past. The only exception was the 2018 bear market, where we didn't quite reach this bottom territory, but usually we stay in this dark green region for quite a while. Next, let's look at the Bitcoin realized price bands, and nothing has really changed here. We're still in the pretty nice value territory right now in this green ribbon, but typically speaking, we do see the price dipping below the fair value before the bottom is actually in. Do with this info what you wish, because obviously we may not get the traditional dump all the way to like 39,000 or so. We may just oscillate around this level, or maybe we get a small dip below this white line here before bouncing back higher again. So don't get too married to that idea of having to go to the blue line or even wicking below it like in the previous cycles. As you can see in the previous cycle, we didn't actually wick below the blue line. We barely even touched it, as you can see. So we do see some diminishing volatility here. It could be that this cycle we will have even more diminishing volatility. Next, let's see what Minotaur is up to. As you can see, we've had lots of beautiful trades here over the past 1 month or so. It's just going sideways, and this 1% take profit is pretty much ideal for capturing all of these little moves. And this is just a longing bot, because nowadays we actually run both the longing and shorting bots side by side. A lot of clients are also using the bot with multiple uncorrelated assets like gold, natural gas, copper, etc. So this is one of the bots that we've been using with gold, for example. And naturally, because we're in a bear market, we actually like to run it in both directions. So if you go into the settings here and reverse the direction, you can just choose short, and it will show you the trades it's doing while it's actually waiting for the longs to get back into profit. In a sideways market, this essentially doubles your trading frequency and profitability. As usual, if you're interested in the trading system, make sure to click on the link in the description. You can either purchase the bot outright, or you can test it for like $50 a week and see if you like it. I will personally help you set up your system and help you with any questions you may have. When looking at the DXY, you can see that the dollar is still continuing its uptrend, and we are expecting the top to happen when Bitcoin is extremely undervalued. It doesn't have to be at the exact bottom. For example, in this market cycle over here, the dollar topped out with the COVID crash, which was kind of like the secondary bottom. So we do see an inverse correlation, but it's not always super obvious how it's going to play out. But it would be really nice to see a top in the dollar toward the end of the year, because that would just be extra confluence. The unemployment rate is coming down as well, which is good. This means that there is no imminent recession risk. And when looking at the federal funds rate, you can see that this is also coming down, but it's projected to stabilize around the current level because the economy can handle it. The S&P is still extremely bullish as well. It's building what looks like a bull flag right now, so I wouldn't be surprised if we saw even more upside in the future. Silver is still crashing, gold is still crashing, so nothing new here. Some people have also been asking about altcoins, and the thing with altcoins is that there isn't really much interest in them right now. As you can see, Bitcoin dominance is still really high. We didn't really see much euphoria in the previous market cycle, so there really wasn't any alt season either. And all the attention is on Bitcoin. The previous market cycle didn't really look that much like a typical bubble. It didn't have this parabolic blow off top where altcoins typically thrive. It was mostly an institutional driven cycle, and MicroStrategy is not going to buy Dogecoin. So we'll have to see whether altcoins will ever become popular again. Usually every market cycle has its own narrative. The previous one had this institutional adoption narrative. Then we had the NFT mania bubble. And then the one before that over here, we had the Ethereum token bubble. But if you want returns better than Bitcoin can offer, then MicroStrategy is a pretty good option these days. Even though that's still pretty risky, it's still way less risky than picking a random altcoin and hoping it'll go to the moon. Here's also a quick update on my long position. I'm currently in one trade, and I'm looking to add anywhere between 2 to 5 extra trades if we keep dropping here. And yeah, if we can get an average entry price in the mid 50s or so, the trade will have a really good risk to reward ratio, because even if you account for 1x leverage, the liquidation price would be like 50% below. So that would also be the stop. And the potential take profit would be somewhere close to $200,000. As you can see, the risk to reward ratio would be around 4.56 with this setup. As predicted, July will probably close in the green. The question is what will happen in August, September, and October. Traditionally speaking, these would be quite difficult months. When looking at the moving averages, you can see that we're still hugging the 200-week moving average. We did dip slightly below it and then immediately closed right back above it, and we've been finding support ever since. But as you can see, this is also what happened in the previous cycle. We dipped below it, then found support on top of it, and then we had our final drop. So I wouldn't rule this possibility out. If we do end up getting some sort of final relief rally here before putting in our bottom, then I wouldn't be surprised if we actually retested the 20-week moving average or even went slightly above it. This is very common in bear markets. As you can see, we also did this in the previous bear market. Anyway, guys, that's all for today. I'm going to go on a little trip for the next few weeks. I'm going to visit my home country of Estonia, but I'll be back with a new market update soon.